Hey folks, and welcome to the Pipnotic Symposium on the 17th of October 2025. Right, today we're just going to have a look at kind of penciling out like a concrete strategy here, because I think there's a little bit of confusion about what to do. So we're just going to use any old asset. This is the pound American dollar. And so what I like to do is I like to wait for price to visit historically respected levels, which I refer to as time-based liquidity in the smart money playbook, or an area of supply and demand, or a buy and sell zone. And this is on a higher time frame. So if we take a look at this, I mean, if we look for time-based liquidity here, we would be looking at like these lows here. So when price comes back to that on the higher time frame, we'd be looking for confirmation entries on the smaller time frame. Okay, we had a test once, second time we went through here. So where did price go to? Well, price went to an area of demand just here, as you can see. Okay, price went into that level, we had a deeper push, and then we left. And so what I'd do is I'd wait for price to visit these areas, and when it does that, well, then I would go to a smaller time frame and I would look for something to tell me that price is indeed going to respect this. Okay, so if we just focus on this area of demand that we identified on the daily chart, notice here that price poked into it, we moved sideways, and then we moved away. You don't have to get in as price moves away, because price very often and almost always comes back to rebalance the initial price inefficiency that you can see here. Okay, so price goes, we mark this low, first of all, like this, right here. Okay, price comes below it, which is a good thing, then it snaps back, also a good thing. So we have two things going on here. We have, number one, price is poking into this daily demand, and number two, price is looking for bids below this low here. As price comes back to this zone, we have one test, and the next one, price goes through it, and then we snap back very strongly. We have huge inefficiency as price moves up to this supply just here. This is a good thing, okay? But you just wait for the market for price to show you what it's going to do. You wait for it to show you to show its hand before you act. And once this happens, then you know that we have a bias to buy. Number one, we're in demand. Number two, we had some liquidity exploration down here, and we picked up some bids, and we can see that because price is left. So we want to wait as price rebalances this price inefficiency. We have the origin down here. The software marked it off beautifully just here, this little box in here. This is great. So you want price to come down, and what we have here, we have a buy zone here. The buy zone qualified by the zone is right here. So you could wait for that one. We'll just do that just to keep things clear, where you have the zone and you have the buy zone. And so when price moves into this zone, then it's time to be alert, okay? It's time to be alert. So here, price moves into the zone. We actually go through this area of demand. We go to the bottom of the zone, we snap back, and then we do it the same thing as we did over here, and that is that we explore below here, we poke just below it, and then we start to close higher. And when you start to form buy zones on the release, this is the zone, kind of the base, if you will, and then you have a gap between this area of like premature demand, because it's not qualified just yet, because price did not move above a significant high to the left, but we had this, and then we can see acceleration, because this bar, when this bar closed and this one opened, price did not manage to come back. So the slingshot is actually, the slingshot excuse me, is right here. So this is telling us that this was the closest that price could come to this area of demand before it managed to trade higher. And so what you could do is you could consider taking your trade just here on the close of this candle here. Once this candle closes, normally if this candle closes above the high of the release candle from the zone, it's not going to come back. If it does something like this, where, oops, too early. If it does come back, where it goes, this is the open, let's say it does come back and it goes back into the zone and closes like that, then it's probably going to come to the zone and it might even move all the way through the zone. So you have to be careful. You have to be able to differentiate between the two. But when you see something like this, what I find myself doing typically is just clicking in at market with my stop below here, or the stop, most comfortably if it's this close, just below the zone, and I put my target at like some reasonable highs, and I think I would have put my target. This is 1.5. That's not terribly good, so I'd probably try to go for here. Here we have 2.0. Okay, right here. I got in. I didn't get this trade, but I got in here instead. And so what I was doing here was, okay, so before I jump to this next trade, this is how I would manage this. And so you would be looking for price to visit a higher time frame, time base, or price-based liquidity. Okay, so it could be supply and demand, a buy and sell zone, or a significant lower high from a higher time frame. Okay, this is what you look for, because this is where prices will typically stop and bounce. Then I wait for price to reach those zones. When that happens, when price reaches any of these zones, the supply and demand, buy and sell zones, or the time-based liquidity, I just put an alarm and I wait for price to reach them, because this is the hourly chart here. We reached that demand just here, and we had hours, maybe even a couple of days to get ourselves prepared for this trade. Okay, so price moved into the zone here, with the alarm went off, then you have time to think about it. Okay, so this is how I would go about trading something like this. What I did when price turns around, because you never know if price is going to turn around until it has turned around. Okay, and here you have prices going lower, moving higher, rebalancing, and then releasing. The fact that price snapped down and then snapped up quickly like that is telling us that there's a lot of bids that were picked up down here at the lows. And so when price rallies, accumulates, this is kind of, what do you call it? I suppose you call it reaccumulation or adding to the position. And this is where prices kind of resettle. Volatility slows down a little bit and moves sideways a little bit, and then we start picking up some bids here. So this is maybe the bigger players filling their orders, continuing to fill orders, and then you can see this super clearly when price kind of explores the lows here, and we go here. When this candle opens, I just clicked in right here. I had my stop down here. Actually, let me use this trading tool. When I saw, I had this at about 2. I had this at about 2 here. Yeah, it's pretty exactly much the trade here where, excuse me, where price came down to the zone. I saw price go below and then close higher. Then on the open of this candle is when I bought. I got in here. My target was here. I took this one out here and I closed the other one out manually. I left a little bit on. Then I think I got busy and couldn't sit here. So this is just another way to do it. And so you can take the initial one, and these are a little bit more difficult to time, because prices are just timing, and you think, well, when's price going to stop? And so you're kind of guessing it's going to stop here. Is it, or is it going to take another leg down? Is it going to stop here? Is it going to take another leg down? But if price stops and then starts to do this, well, then it's kind of telling you, okay, now we are moving away. And this is what happened here, around here. Prices move up. So they've shown us that they're turning around. They've stopped. They're doing this. We go for the lows. We move higher. I got in, and then price went higher. This is essentially what we're doing. And so we're not trying to pick the bottom. We are simply waiting for price to show us where the bottom is, and then we're just trading the continuation of that move away from where prices turn from, because this can be quite difficult to time, and I've lost a lot of money trying to pick bottoms. As a matter of fact, I don't even do limit orders at these extreme levels anymore, because it's a poor man's game, and we're doing this so that we can earn money, not to lose money, and setting limits at these zones here, while they sometimes work. I mean, this one would have worked. Historically, and over a large enough sample size, they won't work, so don't do it. But what I do advise you to do is to wait for price to show you what it's going to do. It shows you that the price is turning around. We start to move away, accumulate, move away, reaccumulate, explore liquidity below this low, and then just buy at the release as prices move higher. And I made a tool, another tool for this that you guys are free to use. If you go to, actually let me go to my, this is my first chart. If you go to the indicators, I made a tool called Pipnotic HTF bars, higher time frame bars. And this is a nice tool because it enables you to look at one chart, the hourly, yet see two different time frames on the same chart. So here we have the 4 hour and here we have the daily. And so I can see very clearly what's going on on the current time frame, but also the medium time frame and the longer time frame, as you can see just here. So you can go ahead and grab that if you fancy. Anyway, I'll leave it at that. If you have any questions, let me know. Thanks for watching.